So I don't think the base case is a recession, but I do think that that's a possibility. And if you think back to the beginning of the year, that wasn't on anybody's sheet as being sort of a relevant scenario. But now it is in a lot of forecasts. They put some weight on a recessionary scenario. But right now we don't have that as sort of the base case. I think the base case is that growth slows and appreciably slows. So it's going to feel like a downturn, and we're going to also see prices go up. Now, whether the price level, kind of settles and therefore inflation is temporarily high and then moves back down, that's also something that certainly central bankers are focused on, because they need to be doing what they can do to keep inflation in check. So that's sort of the conundrum for the Fed right now, and why they're waiting for more clarity, because it isn't clear whether there'll be one-off price increases that then settle down, or whether there'll be retaliatory tariffs that then lead to further price increases that destabilize inflationary expectations and then lead to further increases in inflation. So that's, again, sort of what everyone's sort of waiting for clarity about, is how that is going to actually play out in the economy. You're also correct in that uncertainty itself around the policies, whether it be trade policy, immigration policy, even the tax bill now working its way through Congress, that uncertainty can lead to somewhat of a wait-and-see paralysis and will affect investment, which then can have long-run implications for the U.S. economy.
A few months ago, I remember when we were sort of really at the sort of the nascency of the fear about what kind of impact there might be from the tariffs, and of course there was the concern about the inflationary side of things. Amidst the sea of predictions about further rate cuts from the Fed, including from the Fed themselves, there were a few outliers saying, no, actually I think the Fed might have to do a pivot on all of this and end up hiking again. Is there still the risk of a hike down the line?
I think there's always a risk, because anything can happen. I think that the better strategy would be to hold rates at current levels long enough that you re-anchor inflation expectations. And then if it turns out that the unemployment rate goes up and the labor market deteriorates more than anticipated, you are then willing to move more aggressively down if you need to. At this point, I think they would be reluctant to raise rates, but of course, if the inflationary pressures from the tariffs do turn into something that's more permanent, that would be on the table as something to consider. I just don't think at this point that's in the forecast, and I don't think the Fed's anticipating having to do that.
If we pick up on the theme of the weaker dollar, then, Loretta, it might be a case of be careful what you wish for, and also there is no such thing as a free lunch, because I wonder whether in getting what the Trump administration wanted, which was a weaker currency, is that also going to fan the flames of inflation?
Well, you're right. If you look at the textbook response to higher tariffs, right, you'd expect the dollar to be appreciating. Instead, what we've seen is some depreciation in the dollar, and that can be inflationary. So again, it's one of these, this shock from the tariffs, this is not just a marginal change. This is a large change in the tariffs, even if they negotiate down and have some trade deals that negotiating lower. It's still a much higher tariff rate, effective tariff rate, than what we've had before. And so I think partly what's going on is we're moving from one equilibrium to another, and that's going to be jarring in a number of different aspects, the dollar being one of them, financial markets another, and then you add on top of that the new tax policy and the fiscal policy going through. That's going to add to deficits, and that also is going to impact the long-term bond yield. So again, this is not a marginal change that you can sort of work through your regular economic model. It really is a change, a fundamental change, and I think we're seeing that in all countries, not in the U.S. and other countries around the world.